live at TFNN. Breakout Investing with your host, Ken Shreve.
That's me, Ken Shreve. Welcome to another edition of Breakout Investing on TFNN. Thanks very much for tuning in. Good day of phone calls yesterday on the show. Let's have more today. Give me a call, 877-927-6648 on a good, strong up day for the market. Have to be some stocks out there that you're looking at. You may have a question about. Give me a call, 877-927-6648. My show airs daily now on TFNN from 3 to 4 Eastern. If you can't listen live, you can also get it as a podcast on iTunes. And don't forget, you can listen to all TFNN programming on your smartphone. Very simple. Just open your smartphone browser and type in tfnn.mobi, tfnn.mobi. And then it's as simple as clicking listen live or something like that. Very intuitive interface, so be sure to listen to TFNN on your handheld device. And if you want to look at charts right along with me on the program today, you can do that with Tiger TV. Just go to the homepage of TFNN.com. The show is carried live on Channel 1, and it is archived on Channel 13, and Tiger TV is also viewable on your smartphone as well. All right, good, strong up day for the market. Let's start by taking a look at the volatility index. The VIX still can't get out of its own way here after hitting an intraday high of 15.15 today. It is now trading near its low, down 25 ticks to 1438. That's about 1.7% decline. Trying to rally here, just having a hard time, and I think that's obviously a positive for the market. We've talked about the weakness in bonds. That is happening again today. Let's check in on the TLT here. This is the iShares Barclays 20-plus year Treasury bond fund, getting taken to the woodshed again today, down 92 ticks to 121.13, down about 0.75%, coming close to its 200-day moving average here at 119.10. The yield on the, with bonds as weak as they are, the yield on the 10-year note up to 1.84%, approaching a pretty key resistance level at 187. And the 30-year bond the yield up to 2.96%. It is also sitting right at a resistance level here. So weakness in bonds certainly helping the inflows into stocks. And let's check in on the UUP, the U.S. dollar index right now, weak today, down 31 ticks, about 0.4% to 82.34. This is the PowerShares Deutsche Bank U.S. dollar index bullish fund, popular ETF that is comprised of several long U.S. dollar contracts. UUP right now down 8 cents, about 0.4% to 22.64. And you can see resistance at the 50-day moving average here. So weakness in the dollar, also a friend to the stock market. Large cap tech doing pretty well today. Let's start by taking a look at the NASDAQ 100. NASDAQ 100, big move for the NASDAQ 100 today, up 1.3%, about 36 points to 2771. 2771. Still flirting with a breakout here over the March highs, the spring highs earlier this year. But listen, the market trend is upward. We don't want to fight the trend here. A lot of disbelief about this rally. You can see there's some pretty decent juice in the NASDAQ 100 today. Volume tracking much higher. It was light yesterday, tracking much higher than that today. So, good volume, not great volume, but the fact that it's probably going to end up being significantly higher than yesterday, I think is a good sign. Same with the NASDAQ composite. Let's take a look at the tech index here, more broad-based than the NASDAQ 100. But the composite is up 1.1% today, 33 points to 3,064. So nice move for the NASDAQ composite. Volume on the NASDAQ yesterday, very light at about 1.5 billion shares. We're tracking about 30% higher than that today. So, actually, you're looking at possibly an above-average day for the NASDAQ composite here. Could end up seeing 1.9, maybe even 2 billion shares on the NASDAQ today, which, again, points to some accumulation going on in the market here. Again, a good sign. S&P 500, let's see what this index is doing. It is up near its session high as well. S&P 500 currently at 1416. Last quote for the S&P 500, up about 10.5 points. 0.7% lagging tech stocks today a little bit. It is also flirting with a breakout here, not only over the April high here, but also the March high here. So this is kind of what's exciting about this market, is that we are, seemingly on the cusp of a technical breakout. Now, just to reiterate a point that I've been making in recent shows, that as you approach former highs, which the S&P 500 is doing, the Dow's doing it, the NASDAQ's doing it, it's not uncommon to see a little bit of a shakeout before a true breakout. So we have to be open to that possibility. I think if we do get a shakeout before a breakout, I'm not expecting it to be a long, drawn-out, painful occurrence. I think it's probably going to be pretty quick. David White was just on saying that the options expire tomorrow, so we could see some volatility, some heightened volume in the market. But listen, bottom line right now is the trend is upward. It is why I have been putting money to work in the Ultimate Growth Stocks model portfolio. Have several names in there that are working quite nicely today. And if you want to take a 30-day free trial to Ultimate Growth Stocks, you can do that right on the homepage of TFNN.com. Just look in the carousel for Ken Shreve's Ultimate Growth Stocks, or you can click on the newsletters tab right on the homepage, click on investment newsletters, and it'll take you there as well. But I'm optimistic about this market. I've been optimistic for a little while, and I don't have huge exposure to stocks at this point, but I've got enough to be, participating in this uptrend. Have some nice large cap tech that's working in there, and some other small and mid cap names. So if you want to see the holdings in the model portfolio, I've got 8 names in there right now. I'm not going to be averse at all to perhaps adding a few more in coming days and weeks, but that's going to be dependent on what the market tells me to buy. That's sort of at the crux of how I approach the market. I don't let personal opinion, I don't let guys on TV tell me what stocks to buy. I look at my screens, I look at stocks under accumulation, I look at stocks that are poised to break out of consolidation areas, and these are the types of stocks that you want to be looking at in the early stages of a possible breakout for the market. So so far so good. Good solid day for the market, and the fact that we could see 1.9, even 2 billion shares on the NASDAQ today, that's relatively speaking pretty decent volume, and again, it's tracking about 30% higher than what we saw on Wednesday in the NASDAQ. Haven't looked at the Dow yet. Let's check in on the Dow. Dow and S&P 500 lagging tech stocks a little bit today, but the Dow is making a nice move today. It is up about 98 points, call it 0.7%, pretty much in line with what the S&P 500 is doing. Last quote for the Dow is at 13,262. So you can see a nice break above some recent resistance. The Dow is also flirting with an upside breakout here. Inside the Dow, well, big reason for the Dow's strong performance today. Let's take a look at shares of Cisco Systems. They reported earnings late yesterday. Big day for Cisco. I mean, this is a big mega cap liquid stock, and a lot of buying demand in this stock today. Stock is up 10% to $19.09. Gaps above its 200-day moving average here. So good strong day for Cisco Systems. And John Chambers, CEO of the company, said that big U.S. customers are buying again. That's a good thing, but Europe remains weak. Not a surprise there. Earnings were up 18% from a year ago to 47 cents a share. Sales up 4% to $11.7 billion. Both the earnings and sales figure were slightly above expectations. So buyers in Cisco Systems today, that's helping the Dow. Walmart, on the other hand, is weighing on the Dow quite a bit. Shares of Walmart down 3.2% to 72.10. See, Walmart has been a picture of relative price strength in the market. It gapped down today. Some big sellers in Walmart today, but still holding somewhat comfortably above its 50-day moving average here at 70.90. That's the kind of a key short-term support level here for Walmart. Wouldn't be surprised to see it firm up at that 70.90, maybe 71 price level, but last price on Walmart, 72.10, down about 3.2%. Earnings were up 5% from a year ago. Sales up 5%, $114.3 billion in revenue. I mean, just an enormous company here. U.S. same-store sales rose 2.5% at Walmart. At the company's Sam's Club warehouses, they were up a little better, 4.7% same-store sales increase there. So a lot of good news priced into Walmart. It has been a monster performer in the market. You had a big gap up in May here over, what was it, about $62 a share. And, 10 points later, it's finally under a little bit of selling pressure. But I suspect this 50-day moving average probably is going to be a support level for Walmart. Taking a look at crude oil today, up again, 1.4% gain for crude oil to $94.60 a barrel. Gold for December delivery, up $12.60, 0.8%, settled at $1,619.20 an ounce. Take a look at the GLD. This trades at approximately one-tenth the price of an ounce of gold bullion. It's been holding above its 50-day moving average here. Last price for the GLD, 156.71, up about 0.7%. So GLD having a decent day here. Mentioned the dollar, bond yields higher again. Some story stocks today. Let's take a look at IDIX. This is a kind of a speculative biotech here. Idenix took a hit pretty big today. Stock is down about 31% to $5.75. The FDA put a partial clinical hold on Idenix's phase 2 trial of its hepatitis C drug, IDX-184. You might remember earlier this month, early August, Bristol Myers Squibb made a decision to halt one of its own hepatitis C trials after one of the subjects suffered heart failure. So hepatitis C, sort of a challenging space for some of these drug makers. Idenix under quite a bit of pressure today. Let's check in on shares of Facebook. In the news today, its lockup period ended. I read it was a post-initial public offering lockup of about 270 million shares. That expired today, making them available for insiders to sell in the open market. Looks like they are doing that today. The stock is down 6% to 1992. Before today, Facebook's 52-week low was 1982. So, here's a stock flirting with 52-week lows. Unbelievably still selling at 68 times trailing earnings and 31 times forward earnings. Still gets quite a bit of valuation, even though the share price has been decimated since its IPO in May at $38 a share. So Facebook still has a lot of growth challenges ahead of it. We'll see. I am not touching the stock here. All right, folks, you're listening to Breakout Investing on TFNN. Ken Shreve with you. We'll be right back.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kay Stalter, David White, Larry Pesavento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure, 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, everyone, to Breakout Investing on TFNN 877-927-6648. Give me a call if you have a question about an individual stock, see something moving in this market. Right now, the market trend is upward. I think the Nasdaq's price action today is particularly compelling because we are seeing a little bit of volume push. Right now, Nasdaq volume tracking about 30% higher than what we saw yesterday. Granted, yesterday we only had about 1.49, 1.5 billion shares trade on the Nasdaq, but still 30% higher. You're looking at possibly a 1.92 billion share day, which would be the heaviest for an up day for quite some time. Plus, you've got some stocks acting quite well up there. If you are underinvested at this point and you believe that this the market is going to be able to successfully break out and present some profit opportunities, leadership normally doesn't take shape in a day or two. It usually takes several weeks. So don't feel like you're missing out if you still don't own any stocks here. Like I said, I have 8 stocks in the model portfolio. They're all outperforming nicely today. I'm not going to be averse at all to adding possibly 3-4 more names in coming days and weeks. And once the model portfolio gets filled out, then I'll be able to identify the leading stocks in the portfolio, funnel money into the strongest performers, and then identify the dead weight. There probably hopefully won't be much, but out of 11, 12 stocks, you're usually not going to have a batting average of 100% when you're buying growth stocks. So you got to let the kind of leading stocks, let the cream rise to the top. I have a pretty good idea of who those names might be in the model portfolio currently. And again, funnel money into what's working, and if there's dead weight in the portfolio, we'll cut it loose. And maybe it's for a small profit, maybe it's break even, maybe it's for a tiny loss. The goal is to, again, just funnel money into what is working, and if indeed new money is going to continue to come in from the sidelines here, which I think there's a reasonable chance of that happening. It's not going to be a straight shot up. Like I said, I wouldn't be surprised to see a little bit of a shakeout here before a breakout, but the volume on the NASDAQ today is compelling, and a name like let's take a look at Amazon. Amazon.com. Stock is up 2.3% today, trading up near its session high to 242.80. You had a breakout. See this big breakout day right here over 233, I think was the swing point right here. If you missed that initial breakout at 233, well, it's given you another opportunity right here. There is some decent volume in Amazon today. It broke out over, I think that swing point there was right around 240, a little over $240 a share. Currently at 242.80. So this is just a good example of a base breakout happening today on a strong up day for the market. Check in on shares of Apple as well. Volume not all that impressive in Apple, and actually the stock is up $5.51, but that's only a percentage gain of about 0.9%. So pretty much in line with the NASDAQ, maybe even actually a little bit below what remember we looked at the NASDAQ 100 earlier in the show. That was up 1.3%. So Apple underperforming a little bit. There was a story, I think it was in the Wall Street Journal earlier today, that the company is trying to get this Apple TV going, and company is meeting or has been meeting with cable TV companies, pitching some sort of cable set-top box that would be built or at least powered by some Apple technology. And I read another article today that, hey, maybe Apple should just buy Netflix if they're really intent on moving forward seriously with Apple TV. That's not the first time I've seen that Netflix rumor, but we'll see. But shares of Apple actually underperforming a little bit today, but certainly had not been flashing any sell signals at all. The volume hasn't been great, and you had a recent breakout over $620 a share at 636. It's only 2-3% past that swing point, so I still think it's probably buyable right here. So let's look at Apple today. Another story stock. Let's check in on shares of Coinstar. Coinstar at one point I thought had the potential to be a strong performing stock, and the chart fell apart, and so it goes. But I got out of Coinstar a long time ago. I remember getting out of Coinstar in the high 60s, something like that. Shares were recently trading around 52.10, up 8% today. The New York Post is normally not known for breaking business news stories, but there was a report today that Coinstar might be on the eyes of a private equity firm. Also, EA Sports was mentioned in that article, as well as potentially a takeover target by a private equity firm. So Coinstar damaged stock here, but still up 8% today to 52.10. We'll be right back, folks.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her small cap roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by Direction Shares. To learn more about tactical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
Welcome back, folks, to Breakout Investing. I mentioned that volume on the NASDAQ is tracking quite a bit higher than what we saw on Wednesday, about 30% higher. Not too bad on the New York Stock Exchange as well. It was very, very light volume on Wednesday on the NYSE, about 495 million shares, thereabouts. We probably could come in close to 600 million shares today, which is nicely higher than what we saw yesterday, but still, a little bit below average. So the real volume story today, I think, is in the NASDAQ composite, and definitely some large cap tech names working okay. I think it's still too early to give up on shares of LinkedIn here. Daily chart looking a little squirrely here, but this is a stock that tried to break out over $110 a share earlier this month, and then market was not ready to let it move. Proceeded to fall below its 50-day moving average, but LinkedIn today up 1.75%, $1.79 to 104.02. So this is a stock. If money continues to come into the NASDAQ here, wouldn't be surprised to see LinkedIn not only try to break out over this resistance level here at 110, but also have to keep an eye on its 52-week high of $120 a share, and so this one, has the look of possibly being an emerging leader, but it's all going to be predicated about, depend on, I should say, whether or not big money flows not only into the market but into this name as well. So this one still has a chance of working, still has more work to do here. Would like to see more signs of institutional buying in shares of LinkedIn. Taking a look at another earnings breakout today, let's take a look at shares of PetSmart. There's just a handful of retailers out there that just have been executing beautifully in recent quarters, and PetSmart would definitely be in that group. Had a breakout today for PetSmart over $70 a share. The pet retailer raised its annual profit guidance for the second time this year. Earnings came in at 71 cents a share, up 31% from a year ago. Overall sales up 9% to $1.6 billion. Same-store sales up 7%. So PetSmart still bullish on business for the rest of this year. Let's take a look at a weekly chart for PetSmart, and this is a stock that to me still looks like it's in buying range here. Good flat base forming. You actually had a base reset. This is a stock that arguably might have been a late stage base, but you had a big pullback last year during the summer of 2011, where the low here undercut the low of a prior base. So what it looks to me is like just a third stage base breakout here over $70 a share. Not the most powerful of breakouts, though, because if you swing back and take a look at the daily chart, you'll see that after early strength, where the stock hit an intraday high of 72.50, it is now trading in the bottom half of its trading range. So I'm always a little skeptical, a little wary of breakouts that can't hold their gains throughout the day. So if PetSmart, closes near its low today after early strength, it would not strike me to be the strongest of breakouts, but strong earnings report nonetheless. Mentioned that the dollar retailers have been under some pressure. I mean, Dollar Tree, just a weird, wild day of trading in this name. It was definitely looking vulnerable ahead of earnings. It has recovered nicely, only down about 1.5% now to 49.23. According to this chart, it hit an intraday low of 38.40, but I'm not sure that is correct. Let me just check another source here. Yeah, it looks like it. The other chart service is confirming that too. So hit an intraday low of 38.40. It is now trading about 11 points above that intraday low. So just kind of a weird looking chart here, but yeah, dollar retailers have been under pressure. They are not the leadership in the market right now, no question about it. Dollar Tree, the earnings were up 31% from a year ago to 51 cents a share. Sales up 11% to $1.7 billion, but the company's guidance was just a little bit lukewarm, and investors did not like that one bit. Let's take a look at shares of Family Dollar Stores, FDO. Same business as Dollar Tree. See, it broke below its 50-day moving average here. Family Dollar Stores up 1.25% today to 64.62, still holding above its 200-day moving average. It's just a stock that is basing right now. Will it eventually retest its former high over here around 74? Possibly, but let's see if institutional investors start to come in and buy the stock again. I just don't think it's likely at this point, frankly. And Dollar General, another former big leader. Dollar General broke below its 50-day moving average in July, tried to rally back above it. It is back below it now, so this could be, I know I talk a lot about resistance at the 50-day moving average, what was once a support level. When it turns into resistance, that's often problematic for a stock. We could be seeing that in Dollar General. Kind of a rough day for shares of NetEase. Take a look at NTES. This is a company that it's a China-based web portal. They operate an online gaming community. Bad day for NetEase, down 14.5%. See, yesterday the stock in high volume reclaimed its 50-day moving average. Definitely some optimism about earnings here, but the earnings were a disappointment. Profit up 19% to $1.08. Sales up 25% to $339 million. Stock taking a big hit today, and it is a broken stock at this point. A little bit of a different story for Cena. This is a stock not quite on my radar yet because it's still below. It's trading below its 200-day moving average, coming up off its lows nicely. Sina in a similar business to NetEase, also based in China. They operate a popular Chinese internet portal as well, offering entertainment, games, and other content. They also operate Weibo, which is a microblog service in China, very similar to Twitter here in the U.S., but shares of Sina up 11% today to 56.61. Mentioned shares of GNC Holdings under some pressure, and here's GNC down another 3.5% today to 35.90. Still trying to hold above its 200-day moving average here. Deutsche Bank downgraded shares of GNC from buy to hold. Set a new price target of 42, but that's much lower than its initial target of 50. So GNC was looking like a pretty strong stock here back in June, but then selling pressure started to build. You see some signs of institutional selling. This is a stock that I was pretty keen on at one point, but again, one that I was out of a long time ago, and happy to be out of it at this point. Economic data today, we'll talk about that quickly. Weekly jobless claims today up 2,000 to 366,000, mostly in line with expectations. Housing starts, a bit of a disappointment for July. They dropped 1.1% to a seasonally adjusted annual rate of 746,000 units. That was well below expectations. The good news in the data was building permits. New permits for building homes rose 6.8 sequentially from June to July to 812,000 units, well above expectations, the highest rate since August 2008. So how did the home builders respond to the mixed data? Let's take a look at ITB here. Good solid breakout for ITB today, up 4% to 1794. Had a little breakout here over 1750, it looks like. So shares of ITB looking strong today. Remember, we mentioned the home builders yesterday looking very strong technically. Shares of Lennar, a little breakout today over 32, up 3.7% to 32.50. So a lot of home builders responding positively to the news. Again, housing starts were a disappointment, but the building permits were much better than expected. Here's a look at Ryland Group. A little bit of a mini breakout here, up 7% today to 26.21. So the home builders rocking and rolling today, along with a lot of other stocks. Manufacturing data today, the Philly Fed, not that great. The Philly Fed for August came in at minus 7.1. That was a little worse than expected. It was minus 12.9 in August. So you've got 4 straight months of contraction for the Philly Fed manufacturing index. You can be assured that the Fed is looking at that, as well as sluggish employment. Remember, yesterday the Empire Manufacturing Index was also weak in the New York region. That came in at minus 5.9. That was well below estimates of a positive reading of 5, much lower than July's reading of 7.4. So 2 straight days of weak manufacturing activity. Moving on, let's take a look at shares of NetApp. Another earnings story here. Stock is outperforming today, up 3.7% to 32.92. Earnings, again, not a growth stock that I'm going to be looking at seriously at this point. It is far off its highs, still below its 200-day moving average. You had earnings down 24% from a year ago to 42 cents a share. Sales were down 1% to $1.4 billion. The results, the earnings of 42 cents was well above the consensus estimate of 38 cents, but revenues a little bit light. But again, a lot of bad news priced into network appliance here, and the stock is outperforming today. Let's also check in on discount retailer Ross Stores. Another well-run retailer here. Kind of a erratic day of trading here. It's down a little bit, down 20 cents now to 68.30. It hit an intraday high of 69.60, still holding above its 50-day moving average here. Ross Stores gave lukewarm guidance. I think it was it TJX? I think TJX had earnings yesterday. Very similar business to Ross Stores, and TJX today up 12 cents to 45.14. So, but some, definitely some interesting stocks moving out here at this point. Mentioned nice little breakout for Amazon. CF Industries, the fertilizer company, has had a hard time recently getting going over this breakout over 208, but stock is outperforming nicely today. A little bit of volume, up 2% to 215.76. Remember, when a stock breaks out over a swing point, you don't want to chase it. You don't want to, buy too late and all of a sudden be sitting on a loss sooner than you expected. But with a swing point of 208 and CF Industries at around 215, this is a stock that is just not quite extended yet. It's only about 3% past that buy point. So I don't think you're chasing CF Industries quite yet here. Take a look at Domino's Pizza as well. Nice little breakout for Domino's. This handle area here, where it was drifting lower in light volume, it broke out over about $35 a share. Stock is up 3.2% today to 35.31. But just good solid technical breakout for Domino's Pizza. And again, what you want to see is these base breakouts in the early stages of a move. I mean, the market has been moving for a while. In fact, if we look at a weekly chart for the S&P 500, where is it? Here it is. Okay, we'll see that the S&P 500 is working on what is almost 6 straight weekly price gains. That kind of lends some credibility to my argument that it's possible we could see a little bit of a shakeout here before a breakout after possibly six straight weekly price gains for the S&P 500. That wouldn't be surprising at all. But pretty impressive run for the benchmark index up to this point. Shares of FleetCor Technologies looking pretty good here. Missed this one. This was a good breakout over $41 a share. It's up 3 straight days now. Stock definitely showing some signs of accumulation, up another 2% today to 42.79. But you know what? Probably a stock that even after its big run is still within buying range here. You can see the weekly chart for FleetCor. It doesn't look too extended here, but this is an interesting company. They provide fuel card and payment products to businesses. Good earnings and sales growth in their latest reported quarter, and a nice outlook too. This is a mid-cap stock with a market cap of about 3.3 billion. Chico's FAS, looking pretty good ahead of earnings. Been talking about this name recently, still showing relative price strength here, working on its third straight gain, up another 0.5% today to 16.13. Earnings are due August 22nd, so I think that's going to be, next week they're going to be out with earnings. August 22nd, earnings expected to be up 20% to 30 cents a share. Sales up 16% to 641 million. So a lot of interesting stocks out there. A lot of stocks working. Still keeping an eye on Regeneron Pharmaceuticals. Nice cup with handle base taking shape here. Watching this name for a breakout over 142. And if I see volume roll into this stock, the growth at Regeneron is compelling enough. I think it's got that good blend of fundamentals and technicals that I like to see. So just waiting for volume at this point in shares of Regeneron. That's ticker REGN on the NASDAQ. So still on the lookout for good positive technical setups here. They're out there. You gotta look for them, but that's what I do for my newsletter, Ultimate Growth Stocks. So again, you want to check out a trial, 30 days free. You can do that right on the homepage of TFNN.com. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kay Stalter, David White, Larry Pesavento, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his market take and provides trade recommendations including precise stops and target profit zones, leaving nothing left to guessing. Log on to TFNN.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday at 11 a.m. Eastern on TFNN. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Welcome back, folks, to Breakout Investing. 5 minutes left to go in Thursday's session. Let's see where we're at here. NASDAQ still holding near highs. The composite up 30 points, 1% to 3,061. I mentioned decent juice in the NASDAQ today. We had 1.49, almost 1.5 billion shares trade on Wednesday. We could come in at 1.9, maybe 2 billion today. So decent volume in the composite today. S&P 500, meanwhile, still holding near highs, giving back just a little bit of its gains, but not much, up 9 points, almost 0.7% to 1414 for the S&P 500. So overall, again, my strategy for Ultimate Growth Stocks is to put money to work during market uptrends. That is what I've been doing. I have 8 stocks in the model portfolio right now. Going to be looking to probably add a few more names in coming days and weeks, because I think this rally could have legs. We do have options expiration tomorrow, so we could see some volatility, and even if we do get a little bit of a shakeout in the market here, maybe come in maybe 2-3%, something like that. I'm not expecting it to be a long, drawn-out, painful experience. Could just be the pause that refreshes, and hopefully we get a nice little rally into the end of the year here. So I do hear, the bears out there that say this bull market is long in the tooth. If you're looking at the start of the bear market in March 2009, well, we're more than 3 years into it, and that is towards the tail end of what a typical bull market lasts. So that is something to be cognizant of. And again, the trend is upward for now. There are enough decent stock charts out there to make me think that there could be some profit opportunities coming forward. So we'll see how it all plays out. Coming up after the close today, it's pretty quiet in terms of earnings. We've got the Gap, GPS. Set to report. Let's take a look at the shares of the Gap. This has been a monster performer, really not showing anything in the way of sell signals. A little bit extended up here. I'm not a buyer at $34 a share, but credit to Gap for an amazing turnaround. This stock was left for dead not that long ago, but they have their products are resonating once again with consumers. The estimate is for earnings of 48 cents a share at the Gap. That would be up 37% from a year ago. Sales growth a bit tepid, but still up 4% from a year ago to $3.5 billion. So we'll look and see what the Gap has to say after the close. And then this is a fabulous chip company that I know does at one point did business with Apple. I think it still does, but a nice base setting up here for Avago Technologies. Fundamentals a little bit questionable. Stock is up 35 cents, 1% to $36.93 ahead of its earnings report after the close. 63 cents is what is expected. That's down 2% from a year ago. Sales mostly flat at just over $600 million. So really not the growth I like to see in terms of earnings and sales, but not a bad technical setup here ahead of earnings. So we'll see what Avago has to say after the close. And then tomorrow, before the open, check in on Foot Locker, another strong price performer in the market here. Foot Locker will be out with earnings before the open. Remember, Dick's Sporting Goods yesterday reported earnings, or this was 2 days ago. Came down to its 50-day moving average. The stock is back in rally mode, up another 1.9% today to 50.78. Also tomorrow we're going to have Hibbett Sporting Goods. We'll check on that before we close down shop today. Shares of Hibbett up 1.4% to 61.79 ahead of earnings tomorrow. Have a great afternoon, folks. Tom O'Brien Show coming up next. I'll see you back here tomorrow, 3 o'clock. Breakout Investing